Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the financial markets displayed some interesting moves in the last 24 hours. If we look at the Australian dollar, the down test at 77.15 along with the RSI both were respected, and at this point though still remains vulnerable due to the fact that there is, from the MACD, still some evidence of a further breakdown. Now, a break of 77.15 would reinstate the downside to at least around 75.5. I do feel from the bearish outside range day and along with the 77.15 break confirms the negative view and puts in play a downslide towards that target. Now, the dollar index, which measures the greenback strength against a basket of 6 major currencies, confirmed the bullish outside range day after closing above 90.75 and also in line with the euro at 120.80, with both confirmed the bearish outside range days to the bull and bear, and the bear case for the euro does reinstate the call to 119.5 and reassess from there. But the MACD nearly marrying up with the RSI does put the bearish case in the next 24 hours. And let's see if we do see a further slide. A little bit of a whipsaw price action with the dollar yen, but nevertheless still keeping on focus to that 106.55 target and reassess as we may see a rejection and a pullback to around that low 105. Sterling still holding above that level of 138, 2030 area. Keep an eye on the technicals. They are looking somewhat heavier and therefore could see a drop down towards this bottom side of the range around 136 if we get a close underneath 138, 2040 or 2030 area. Nevertheless, from the pattern though, I still feel in favor of that slide towards that 136 target. This has put euro along with most of the markets confirming the outside range days, and looking at sterling yen is now breaking down also with a rejection from that overbought condition. We still need a little bit more confirmation, but keeping an eye on sterling. If we break that 138.20 level, then it would give further indication for sterling yen and also some other crosses for the sterling. The gold outlook has continued its decline. Now, it did get to the level of 1,769 where the support is at 65. We're not quite out of the danger zone in terms of the taking out the challenge or taking the challenge to 1,765, as a break beneath there would give further scope down towards 1,680. Technically though, it doesn't look very much in a positive view in light of the patterns, especially from the daily and also from the primary. But we do need the confirmation to support the bear case further from under 1,765 down towards that 1680 level. Well, there was a little bit of a winter snap in Texas that's seen some of the oil refineries shutting down, at least five, I believe, and therefore has put a bit of a demand back into oil again, and we've pushed up towards that $61 handle. With the market just breaking above my resistance level that I indicated around 61.25 to 45, I believe, is that we could see a stretch up towards 63. I'm a cautious bear, purely for the fact is that the market is really much showing some bearish divergence that could see a snap back towards $57 a barrel. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the